Iraqi Dinar Today latest news. This is the report that many within the global currency community have been monitoring, the update that carries potential significance for long-term holders of the Iraqi Dinar. Today, we delve into an important development that is circulating within structured financial circles, specifically concerning a major financial institution in the United States and a reported fixed exchange rate. This is not the type of unverified chatter that often populates online message boards. Rather, it is a focused discussion on a banking action that, if confirmed, signals a procedural shift in how the currency is being handled at the highest levels of foreign exchange operations. This emerging scenario is creating ripples of interest among seasoned currency analysts, international exchange desk professionals, and the committed community of dinar holders who have closely tracked the revaluation RV progress for many years. We urge you to absorb every aspect of this report, as the details surrounding this potential fixed rate are crucial to understanding the developing landscape. The core of this significant development hinges on the numerical value of $2.31, which is reportedly being established as a fixed exchange rate within the systems of a prominent US-based banking entity. This figure is not arbitrary. Within the banking environment, the establishment of a fixed rate carries far more weight than merely observing a fluctuating market rate. It suggests that a major financial institution has completed a rigorous internal gauntlet of compliance, verification, risk assessment, and regional coordination. A fixed rate is a calculated, strategic declaration that demands synchronous approval from critical departments within the bank, including foreign currency specialists, the legal division, international operations, and risk management personnel. Consequently, the mere mention of this $2.31 rate being locked into a high-level banking system implies that substantial, preparatory groundwork has been quietly executed behind the scenes to facilitate a major currency transition. For those who have held the Iraqi dinar for years, navigating an uncertain landscape characterized by rumors and inconsistent information, a reported fixed rate offers something tangible: clarity. The long-standing ambiguity that has surrounded the currency's future value begins to dissipate when a solid, concrete number is reportedly adopted by a major financial entity. Instead of being subject to the daily ebb and flow of unconfirmed reports or waiting for official governmental decrees that have historically been sporadic, holders are presented with a specific value. This clarity is an early and crucial sign of procedural movement. It suggests a shift in the banking system status, indicating that the institution is moving past the prolonged preparation phase and into an active stage of implementation. This distinction is paramount for interpreting the current events within the broader context of the currency's restructuring journey. The significance of this fixed rate is amplified when compared to previous phases of Iraq's financial reform. Over recent years, the Iraqi government has implemented necessary, yet largely behind the scenes adjustments. These have included digital banking infrastructure upgrades, internal monetary policy reforms, and various international agreements designed to stabilize the economy. While essential, these steps rarely had a direct, immediate impact on the everyday dinar holder's portfolio value. A fixed exchange rate, however, is fundamentally different. It is an operational measure that affects real exchange processes, impacting the potential value of the currency in circulation. When a major institution takes the step of confirming such a rate, it indicates the currency may be transitioning into a more public phase of participation, moving away from an era dominated by internal government and institutional restructuring. This transition from chatter to confirmed banking action is why the community reaction has been pronounced. Savvy individuals recognize that locking in a rate necessitates a cascading series of operational readiness steps. Banks must allocate and train specialized staff, update their foreign exchange systems, secure designated exchange locations, develop and test cash-out mechanics, and finalize all necessary security protocols and forms. None of these costly and time-consuming actions would be undertaken unless the financial institution held a firm internal conviction that the timeline for public exchange was genuinely approaching. Understanding this rigorous institutional process helps to differentiate the gravity of a confirmed rate from the noise of speculative theories that have long circulated in the online world. To grasp why a major bank in the United States would potentially take the lead in establishing a benchmark for the dinar exchange process, one must understand the hierarchy of foreign currency handling. Not all financial institutions possess the global infrastructure, technological capacity, or specialized expertise required to manage high-volume, high-value international currency exchanges, especially those connected to an anticipated large-scale revaluation event. Typically, the largest, most globally interconnected institutions, equipped with sophisticated verification and risk management departments, are the first to adopt new currency protocols. Other banks often monitor these leading institutions, awaiting official confirmations before gradually aligning their own internal systems, exchange processes, and adopted rates. Therefore, the reported fixed rate of $2.31 should be viewed as more than a simple numerical value. It is a procedural signal that a key player in the global financial sector is positioning itself for the process. This preparedness by a leading institution acts as a potential blueprint, demonstrating that the necessary infrastructure is being put in place to handle the anticipated volume and complexity. This movement by a financial heavyweight is a potential precursor to broader industry-wide adoption, suggesting an internal belief that the official mechanisms for exchange are in motion or are soon to be activated. The coordination implied by such an action underscores the strategic importance of this particular development. One of the most immediate benefits of a confirmed fixed rate is the stability it introduces to the long-term dinar holding environment. For years, the community has contended with a landscape characterized by inconsistent news, emotional speculation, and wildly fluctuating expectations. A fixed value largely eliminates this chaos, offering a concrete basis for personal financial planning and decision-making. It provides a solid figure for financial advisors to analyze and work with, injecting a sense of realism into future projections. Crucially, a fixed rate indicates that the banking institution is willing to take responsibility for delivering a clear, consistent, and dependable exchange value. The disappearance of pervasive uncertainty fosters confidence, which is an indispensable element during any major financial transition, such as a currency revaluation. Many holders are naturally asking what this reported fixed rate could practically mean for them. The first and most straightforward answer is the unlocking of financial potential. Consider a currency that was historically valued at a mere fraction of a penny suddenly being assigned a fixed value of $2.31 by a leading banking institution. For many, this potential leap represents the fruition of years of patience and tracking, transforming what was once a long-shot prospect into a tangible financial possibility. This potential could be leveraged for debt relief, business capitalization, home ownership, family support, or realizing long-deferred life goals. However, the path to realizing this opportunity requires methodical preparation and adherence to established processes. Preparation primarily centers on the rigorous process of verification and compliance. Banks cannot and will not facilitate large-scale exchanges without proper, comprehensive documentation. Verification protocols are essential for proving the rightful ownership of the currency, presenting valid personal identification, and securely confirming the necessary banking information for the transfer of funds. These are standard operating procedures for any major currency exchange, yet during a potentially significant revaluation event, Regulatory scrutiny and internal bank requirements tend to be even more stringent. This organizational necessity is not intended to slow the process, but rather to protect all participants by ensuring adherence to federal regulations and mitigating potential fraud. If you are a dinar holder, this reported development serves as an urgent reminder to proactively organize and update your documentation. You must be prepared to seamlessly verify your ownership and identity upon request. The implementation of a fixed rate suggests that the flow of people seeking exchange will increase, necessitating a careful, organized, and compliant banking response. Having your documents in perfect order is a critical, proactive step that can significantly streamline your future exchange experience, preventing unnecessary delays or being caught unprepared when the window of opportunity arrives. This focus on readiness is a purely practical measure. A common question that arises is whether this fixed rate signifies the full completion of the revaluation process. It is important to temper excitement with factual accuracy. The fixed rate, while a major step, does not indicate that the entire RV process is concluded. What is being observed is most likely a phased rollout. Financial institutions often implement major transitions in gradual layers to prevent system overloads and logistical bottlenecks. This phased approach includes the initial rate locking, liquidity stress testing, staff training, and the internal coordination of communication strategies. The fixed rate is certainly a landmark achievement, a major section crossed on the bridge, to use an analogy, but it is still a component within a larger, unfolding sequence of events designed to transition the currency back onto the global stage. The establishment of a fixed rate by a major financial entity also has the potential to create a substantial global ripple effect. When a leading bank takes definitive action on a currency tied to such long-standing revaluation speculation, it captures the immediate attention of international financial markets. Global investors begin to scrutinize the move, currency desks worldwide adjust their models and projections, and international banking partners start to review their own internal contingency plans. Other significant institutions are likely running internal simulations to determine how and when they will match or coordinate with the established rate, once an official, sector-wide green light is given. A fixed rate creates momentum, a potent force that, once initiated, tends to accelerate the entire procedural timeline. When preparing to access this fixed rate, holders must consider the practical process of exchange. It is unlikely that every branch of every bank will be immediately equipped to handle high-volume foreign currency transactions. Major exchanges are typically routed through designated branches that possess the specialized security, equipment, and trained personnel required for such transactions. Therefore, a spontaneous walk-in may not yield the desired result. The recommended course of action is to call ahead to the bank's foreign currency department, confirm their participation in the dinar exchange phase, and whenever possible, schedule a formal appointment. This tactical approach saves time and ensures that the holder is engaging with the correct department at the correct location. Furthermore, holders must be prepared for the strong possibility of transaction limits being imposed. Banks frequently implement daily or per-person caps during the early stages of a significant currency transition. This is not intended as a punitive restriction, but as a prudent liquidity management measure. During high-volume exchanges, the institution must ensure a balanced capacity to service the large influx of customers fairly and securely. Therefore, holders should be psychologically and logistically prepared for the possibility of staged exchanges over a period of time, rather than a single, immediate transaction. This organized approach maintains fairness and structural integrity for the entire banking system. Another common inquiry pertains to the possibility of other institutions offering higher rates. While minor rate variations can occur within diverse international markets, Major U.S. banks typically coordinate closely to prevent substantial discrepancies that could confuse the public or destabilize the initial exchange phase. The reported $2.31 fixed rate is best understood as a strong benchmark, a foundational figure intentionally set to create market consistency and stability. When a leading institution adopts a firm number, the broader financial sector generally tends to align with it to maintain a consistent public narrative and ensure an orderly transition. This entire scenario is distinguishable from previous years of speculation because the focus has shifted entirely from unverified updates and rumors to verifiable structural banking action. A locked-in rate represents the culmination of internal institutional checks, training staff on note authentication, rigorously testing security protocols, deploying essential digital system updates, and finalizing all verification workflows. For a major corporation to dedicate the necessary time, resources, and corporate approval to finalize these complex, expensive systems is a strong indicator that the procedural path forward is not speculative but directional. They would not take such steps unless the process was demonstrably moving into its operational phase. Emotionally, this development is highly significant for a community that has navigated years of mixed messages, perceived delays, and shifting timelines. The current steps are visible and measurable, directly tied to real, observable bank operations rather than vague third-party rumors. This level of factual confirmation is what many dedicated holders had hoped for. Yet, even with this progress, it is paramount to remain calm and strategic. This is not the time for impulsive decisions. Rather, it is the moment to focus intently on preparation, securing the currency, ensuring all identification is current, deeply understanding the procedural steps, and approaching the exchange with a clear, rational plan. Clarity is a valuable asset. It must be utilized wisely. Regarding the longevity of the reported $2.31 rate, it is generally anticipated that fixed rates are maintained throughout the initial, critical phases of an exchange cycle. However, these rates are subject to adjustment as broader international and macroeconomic conditions continue to evolve. This reality underscores the importance of staying informed and completing the exchange process promptly once the public phase is officially activated. The sooner all documentation is prepared and the exchange process is understood, the smoother and more predictable the entire experience will likely be for the holder. Proactivity is key during a major financial event. For international holders outside the United States, the exchange process will depend significantly on the actions of partner banks and regional exchange centers in their respective countries. Some international institutions may already be preparing similar structures. Others may be awaiting further, more definitive international confirmations. The best and most prudent course for an international holder is to contact major financial institutions within their region and inquire directly about their participation in the current phase of the dinar exchange rollout. Direct communication with verified institutions remains the only reliable source of information. Finally, with any major financial movement, there is an increasing risk of fraud and scams. Every time a significant update emerges, opportunistic entities appear, falsely offering specialized access or promising unrealistically faster results. Holders must exercise extreme caution. The safest, most trustworthy, and ultimately the only compliant path for exchange is through official, verified banking institutions and established exchange centers. Anyone offering rates above the established benchmark or promoting secret, exclusive deals is highly likely attempting to perpetrate fraud. Protecting one's currency and identity by strictly avoiding all unverified offers is non-negotiable. Ultimately, this moment represents genuine, measurable progress, a point where years of stability, seeking efforts begin to visibly accelerate into structured action. It is a moment where a major financial institution is reportedly signaling that the long-anticipated process is active, structured, and has entered a more publicly accessible phase. For those who have committed to this journey, this fixed rate serves as potent evidence that the structural process is unfolding, transitioning from a period of slow, deliberate background work to a sudden, highly visible operational phase. While the currency's full revaluation may still have steps remaining, the path forward has become significantly clearer with this reported banking action. Before we conclude, a final, simple checklist for preparation is warranted. First, commit to staying informed using only verified news sources and official bank channels, actively filtering out all random online speculation. Second, immediately organize and update all necessary documents. Third, maintain emotional calm to ensure that all decisions are smart and strategically sound. Fourth, accept and prepare for a potentially phased rollout that will involve appointments and a controlled timeline. And fifth, protect yourself from all fraud by sticking exclusively to official institutions. The reported $2.31 fixed rate is a substantial development. It demands preparation, verification, and patience as the next crucial phases unfold. The Iraqi dinar has reportedly seen a fixed rate of $2.31 adopted within a major banking system. This is an update rooted in the reporting of structural banking action, not mere speculation, marking one of the most visible steps forward in the currency's journey. Preparation, thorough verification, and patient adherence to the official process are the defining characteristics needed for navigating what comes next. The foundational systems are reportedly in place. The fixed rate is an established benchmark, and the potential opportunities for dinar holders are solidifying daily. Stay informed and ready, because the process continues to move forward.